Hello everyone. So now we are going to continue with our discussion. In the previous lecture, we have completed the portion of the audit report, and now we are going to move ahead with the new discussions, which is on your different types of regulators, or you can say the different accounting standards. Okay, which system we need to follow, clear, and why it is important, clear, because there are if you have thousands and hundreds of suppose methodology of creating the financial statements. So suppose I'm just giving an overview. Two companies A and B, clear. Now company A is using IFRS and company B is using US GAAP. Now how you will compare their financial statements, and how you will compare that which one is better, A or B, because they have prepared their financial statement with different types of standards, clear. So in order to overcome this issue, we have decided that we will keep only limited number of standards, clear. Otherwise what will happen, C will use some another method, D will use some another method, E will use some another method. Are you understanding? So if there are multiple methods, then how you will compare, but now we know that we have two methods, clear. So we can study both the methods, and if required, what I can do, I can convert the financial statements from one method to another. From one method to another means someone is using, say B is using the US GAAP and A is using the IFRS. So what I'll do, I can transfer it to the IFRS. That much I can do, because the changes are limited, it's not way too huge. So this is something which is manageable. Are you clear with this understanding? So now one thing is clear to us, that what is this audit reports. But now while doing the auditing, okay, we have understood that there are two different methodology, or you can say two different accounting standards, and that matters a lot. One is IFRS and another one is the US GAAP. So we need to consider which one a particular company is using and why they are using. Are they having any form of benefits or not? Okay, so give the heading, why accounting standards matter. Why accounting standards matters. IFRS versus US GAAP. Clear? So basically over here I'm going to talk about that why there are different accounting systems in the world. Clear? What is this IFRS and US GAAP? Clear? How this difference will actually affect your financial analysis, and why you need to stay updated with the new changes in these standards. Clear? Now the first question comes, sir, why there are two different standards or different standards? Like in India we have Ind AS. Okay, in India we have another different form of standards. So why there are different accounting standards? Why not only one? Clear? So imagine that there are two students from two different schools and they are showing their report card. One says 90 out of 100 and other says I got a grade. One says 90 out of 100 and another one say that he got a grade. Clear? So can you compare them? Definitely not, because their grading systems are different. Clear? So this is exactly what happens in the business world. Some companies going to follow the IFRS, that is your international financial reporting system, while others will follow the US GAAP, full form generally accepted accounting principles in the US. Clear? Now these are the rules for preparing the financial statements. Clear? But they both have the aim to show the true picture of the company as well as the financial statements. Clear? So IFRS is generally used in the European nations. US GAAP is used in the US basically. Clear? Now if you look at the other methods as well, other standards, they both are also inspired through these methods only. Like Ind AS is inspired from IFRS. Clear? So if you'll ask me, IFRS, okay, where it is used in India, It is used in India. Clear? It is also used in Europe. It is also used in Asia and some other countries. Are you clear? So IFRS is widely used in India, Europe, Asia and many other countries, and it is issued by IASB. IASB, write down, International Accounting Standard Board. International Accounting Standard Board. Clear? Write down. It's a principle based. It's a principles based. What does this mean? It actually gives the company more flexibility and judgment. Write down. It gives more flexibility, more flexibility, more flexibility and judgment to the companies. So means they are going to give you the options that whatever suits you the best, you can pick it up. Clear? But US GAAP, it is mainly used in United States and it is issued by FASB. FASB stands for Financial Accounting Standard Board. Financial Accounting Standard Board. And these standards are rule based. Rule based means they have defined the rules for each and everything. Clear? They are more strict, having the more detailed one. Clear? Are you clear with this? Okay, let's move ahead. Now, why should you care this thing as an analyst? Okay, let's see, you are comparing the two companies, one from the India, another from the US. So you look at their financials and you see that Indian companies show more profit. Clear? But this can be the possibility because of the accounting standard, not because of their actual performance. Okay, this is the one scenario. So under IFRS, revenue might be recognized sooner. Means what happened, this is your 31st of March, that is your closing balance sheet date. But suppose you know that one sale is going to happen on say 1st of April. Clear? And you have received the money before 31st of March and you have recognized it as a sales, and hence your profit will increase. Clear? There is a possibility. Or lease might be shown differently on the balance sheet because there are multiple ways of doing the same thing. Clear? Inventory cost like FIFO and LIFO, like FIFO and LIFO, FIFO and LIFO. Clear? It may be treated differently. Are you understanding? Because there are multiple methods of inventory bookings. Clear? So which method you are using, it totally up to you. So you will study all these methods in detail in the coming topics. Clear? Inventory cost, I have said, lease, I have said, revenue. Like this, there can be multiple things companies can tweak, and based on that your profitability can either increase or it can decrease. So if you are comparing them without adjusting, you might make the wrong investment decision. That's why analysts must be very careful when they are comparing the financials across the borders, or better word to use, when there are different methods of financials have been used. Clear? So they can make the changes in terms of revenue, they can make the changes in terms of lease, inventories, equity, so many things. Okay, so it's up to us how we actually look at a given financial statements. Now the final point, why we need to stay updated with the changing standards? Sir, I have done it once in my life and I have prepared it all. What's the use of doing it again and again? Are you clear with this? Now, the reason is that there are new types of assets coming, like crypto is coming, carbon credits is coming, intangible tech patents are coming, new different business models is coming, like platforms, AI startups, freemium models. Okay, then new stuff is coming, like we need to report the environmental, social and governance stuff. Clear? So your accounting standards are also changing, because when new things are coming, how your old standards will fit into that? That's why both the accounting standards, IFRS and US GAAP, they are updated regularly. So being an analyst, you also need to be stay updated to understand that how they will impact the profitability, assets and risk as well. Clear? So adjust your analysis accordingly and avoid being misled by outdated methods. You need to be purely updated. Clear till here? Are you clear? Perfect. Let's move ahead. Now, what's your job? What's your job as an analyst? That also needs to be defined properly. See, you are not just looking at the numbers, because sometimes numbers can also fake, because sometimes it can happen that numbers can also fake. So we need to update ourselves not only with on the based of numbers, okay, not only based on the numbers, but we have to check whether the company have used significant estimates or assumption or not. Sometimes they have made some assumptions which are not realistic. That is also a possibility. If something which is not realistic, then no point of assuming those as real. Are you clear with this? And if there is any change in the accounting policies, we stay updated to it, and whether the company have followed that or not. Clear? And if there is new standards or new business transaction is happening, and if they are impacting the financial statements, you must report it in your reports. Clear? Now, let us start the final topic of our discussion. Okay. Now, this is all about the information sources. Okay. See, when it comes that you are analyzing a particular company as an because you want to invest in that company. Clear? So, the first and the foremost source of information is the financial statement analysis. Clear? But apart from that you will do some other analysis as well. Okay, so this discussion is about that. Clear? So let me ask you something first so that you can build that rhythm. If you want to buy a mobile phone, would you only look at the company's brochure? Definitely not. You might also check the YouTube reviews. You will also ask your friends. You will see the online rating, or you might visit the store to check which one is looking best after doing a trial. Similarly, when analyst wants to study a company, they will don't just rely on the official financial report. They will explore many other options. Okay, it can be some from within the company, some from within the company. Clear? Some from outside, some from outside. Clear? There is a possibility even they will do their own research based on the product or the services which they are selling actually. Clear? So the first is when the information is coming directly from the company, that means the issuer is the source himself. Clear? So there are few things which companies share outside the financial share some information which are outside the official financial statements. Okay, number one is like earning calls. Earning earning calls. See, these are some special online, or you can say phone meetings, where the top management of the company will talks directly to the investors, analysts, or even the media. There they will discuss about how the company have performed, basically the quarterly results. They will share their future plans, earning guidance, means estimated future profits, and they will take all the questions from the analyst. If suppose you have your own some questions, so definitely they are going to reply you and help you with the answers. Clear? So imagine that Reliance or Infosys, they are announcing their quarterly results, and then they hold one earning call. An analyst can listen that particular call and learn a lot beyond just the numbers which is there in the financial reports. Now these calls are not audited, so analysts must use their own judgment while interpreting that whether this is correct or whether this is incorrect. Clear? Now coming to point number B is the press release. See, companies often publish their press release to inform the public about if there is any new product launches, some big partnership, if some mergers and acquisition is happening, or if there is a change in some leadership. Clear? So this actually helps the analyst to understand some major business events very quickly. Clear? Now coming to the next one, it is meeting with the management or the investors relationships. See, analysts often talk directly to the company officials because they have some their own specific questions. So these information in informal conversation can reveal some useful insights about the company because they are personally interacting with the company. Clear? So it is meetings with the management. This is meetings with the management, or you can say investors relationship. Now the first source is done, that is within the company. Now outside the company means free public third party sources. Free public third party sources. Free public third party sources. Now, these are the sources outside the company, but they are freely available to everyone. Clear? So, this will cover four different types of information. Number one is industry reports and white papers. Number one, write down industry reports and white papers. Industry reports and white papers. Basically, these are in-depth article about how an entire industry is particularly performing. Suppose white paper on the India's electric vehicle market help us the analyst to understand the Tata Motors or Ola Electric or Mahindra Electric systems. Clear? This is all about the industry. Then government statistics. Government statistics. The government bodies, they publish regular data with respect to the economic growth, inflation, unemployment, sector specific growths. Each of these things are there. Okay, so suppose if you are analyzing a particular real estate company, so housing construction data from the government will definitely help you to understand about the market trend. And this will give you, suppose they say the market is of 100 crores and you see that your company is having the sales of 20 crores. That means you have a 20% market share. Clear? Like this, they will give you a good understanding about how the market is performing, and in that market, how your company is performing. Clear? Media and trade journals. Media and trade journals. Media and trade journals. See, new articles. Okay, most specifically, if I'll say industry specific magazines are there. Okay, they will covers all the competitor performance, regulatory updates, market movements. Each of these information you will find out there. Suppose there is a magazine which is purely on the metals. Clear? And now you are analyzing the companies like Tata Steel, JSW Steel, Hindustan Zinc. So that particular magazine will help you to understand that how the metal market is performing. Clear? The fourth one is the social media. Social media. That means nowadays many companies they share their update directly on some platforms like LinkedIn, Twitter, or Instagram. Clear? And they might hint a new product launch on Twitter before it actually appears in the news. So be always careful. Okay, that everything which is there on the social media is not reliable. It definitely needs a fact checking. So don't believe on whatever information is there on the social media. Clear? Now the third one, these are the free information, but there are some paid information as well. That means some companies are actually doing the research. So there is some paid sources. Paid sources. Some companies like JP Morgan, okay, they have suppose created some reports, okay, on some banks, or suppose steel sector, steel companies. So you believe that they are true and fair, and they have used their own judgment, they have used their own technical analysis. Their people are expert who have actually designed the report. They have met with the CEOs of the company, and then you are reading that report before taking the decision. So they will tell you about the company analysis, valuations, buy sell recommendation. All these reports you will find in these analyst reports, and they will charge you for that. If you want these reports, they will charge you. Clear? Then you have financial data platforms. Financial data platform. Financial data platform. See, there are some platforms like Bloomberg, FactSet, Morningstar, or Wind. They will give you information regarding the financials like historical financials, market data, peer comparison, forecasts, and models. All these are covered up in these financial data performance, and they will charge you for that. If suppose you want the share price of the HDFC of the last 10 years, so where you will find it out? Bloomberg, they will give you in a very much organized manner the way you want to do. And even on their platform, you can do the analysis as well. Clear? So write down point number C. Industry specific research. What happened? There are few companies or few institutions, they're highly skilled with respect to the given segment, given sector like oil, pharma, IT. So they produce the deep research that actually help the analyst to understand that industry specific risk. Might be the possibility that these people are from that particular sector only. So I am an analyst, I don't know about the oil segment so much, that how oil is formed, what are the components. Suppose there is one component in the oil, that component is very useful, but I don't know about that. Means I have to dig inside the ocean and then get the oil, and for the whole process I need one good component, but I am not aware of it, but there is a requirement. And what if that particular component is scarce now? That means the demand is high, supply is very less. Now this oil producing company, they won't get that particular stuff, hence the prices of the oil will increase, because they are not able to supply so much of oil, they won't be able to drag so much of oil. Are you clear? So it's the one, those who are into the industry, they know it better than an analyst, because they are from that particular segments. Clear? Now, apart from this, the fourth one is that you are doing your own research. We call this as a proprietor's primary research, your own research. See, some analysts do their own research, which is very original and it's more insightful. You can trust it. Clear? So whether it is like product testing, or you can do the site visit. Okay, like company is selling some products. So suppose they are selling laptop. So what you'll do, you'll purchase one laptop and you use it and you'll see how it is performing. If it is good, then definitely its demand will increase in the near future. Or you can try out the company's products like Zomato, Ola. You can visit their factory locations and stores. You can interview the employees, customers. We call them as a channel checks. When you interview the employees and customers, I use the term channel checks. Clear? So suppose an analyst might visit the 10 DMart store to see if the customer traffic is rising before the quarterly results are out or not. So this will give you a good understanding. Another one is an expert advice. Sometimes analysts hire some technical specialists like engineers or doctors to help them to understand some complex products. So like a pharmaceutical company, so you need to consult a medical expert to understand that how good the potential is with respect to the new drug. And if you find that yes, it's highly potential, you will invest in their shares. Now, why all these things are important for you as an analyst? See, you read the annual reports, you will get to know the revenue, profits, and assets. But will you know that why this profit increased? Why this is the growth sustainable, or it is a short-term growth? What are customers or competitors doing? Are there any red flags which are not mentioned in the report? So like this, there are hundreds of questions which can come to your mind. For that, we need all these analysis, so that we not only focus about the report, we will focus all around what's happening around us. Are you clear with this? So with this, I say that we have successfully completed our first topic. Clear? And all you need is now just to give a thorough reading and solve few of the questions, and you had a good understanding of the topic now. Okay, I hope you all understood it properly and you liked it. We will go more deep when we'll see the topics like income statements or inventories. Clear? Everything will be in minute detail with lots of practical examples, so that you can relate what's happening around you. Clear? That's what my goal is. So with this, I'm ending this lecture here. Thank you.